Thank you very much for the warm reception. And yeah, as sort of mentioned, this is the second time I've been on stage to do the trends for 2023. I think before we start, though, as the final session of the day, it's always an honor to do this, but if we could give a round of applause to the gang over here. The APS guys have really knocked it out of the park once again. It's been a great event, great sessions. So yeah, thank you very much for another great event here. So, what we plan to do today is run you through some of the key trends that we noticed in 2022, and then going from there also what we expect to happen in 2023 as a result of what we're seeing. You're going to notice a theme pop out here. It's effectively cost of living and inflation, meaning that we are seeing a slowdown, and you'll see that across multiple categories. So, early spoiler alert, but that's likely what we're going to see. But I'll focus initially on the market overviews, then talk through category trends, break that down into the key trends that we're seeing for 2023, and then just give you an overall conclusion. We saw this earlier in the morning, but sort of reinforcing what we saw from our friends at Data AI as well, we do see status quo mostly taking place when we're looking at a lot of the sort of downloads in this space, and when we're looking at sort of consumer spending. Now, generally, if we're looking at those metrics over here, what we can see is that Germany and the UK continue to be the leaders in this market. Not really much of a surprise. The main thing here is that the delta between how much spend takes place in Germany and the UK versus France has actually widened. And then obviously for the very obvious reasons, we've seen a drop-off in spend in places like Russia, which previously were looking fairly strong. If we then sort of focus on what this looks like in some of the broader markets by installs, again, nothing really here that is much different to what we talked about in 2021. No real change, fairly obvious from a status quo point of view. But where we do start to see the big changes is when we break this data down by revenue growth. Now, very interestingly, Q4 2021 was the first quarter of negative revenue growth since 2014. So we in the App Store love talking about how there's continued growth, and the rivers are going to sort of flow with milk and honey forever and ever. But unfortunately, what we are seeing here is very clear declines in growth, and it's been fairly protracted. The impact of inflation is hitting the app economy fairly hard, and even though in Q3 2022, we did see $31 billion of revenue going through the app stores, this was down 4%. The main reason for this is actually a big drop-off in in-app revenue spending in gaming. And gaming is often a bellwether for our ecosystem. So where we see that steep decline in revenue, we do expect that to largely follow through in other areas too. So again, not necessarily to be the bearer of bad news, but we do expect some continued decline in revenue, obviously, as we see the economies contracting and people spending less money. It isn't all doom and gloom, though. One area that we've seen a huge amount of growth in is in the entertainment space. Because of this massive increase and abundance of streaming apps available, all charging a small fortune, we have seen a record growth of 18% in entertainment category revenues, 8 billion in the last 9 months. So that's a huge, huge number, and we expect that to continue to grow. Netflix's new model will obviously benefit them to some extent in terms of the revenues we can't capture through OTT spend, but there might be a small decline in in-app purchase subscription as a result. So continuing with that story and sort of where we are seeing this growth, a few things here are emerging in the data. Whereas previously we spent a lot of time, we have done for years, talking about growth in Brazil, Russia, Turkey, India, we're now seeing those markets nearly reach maturity, and some of the laggards are now catching up. So places like Indonesia and Pakistan, we're seeing huge growths there. That said, particularly when you look at Indonesia and Pakistan, a lot of the growth is also linked to economic turmoil. The second fastest growing category in Pakistan is actually the finance category, and 4 out of the 10 apps 4 of the top 10 apps that have been downloaded there have the word loan in the title. So the economic crisis that has resulted in this huge surge in downloads. Again, where we are seeing growth, it's largely in places that are linked to some form of economic tumult. That tumult isn't just limited to the downloads and the revenues in the app stores. If we look at spend, CPG ad spending, that's also slowed down massively too. Look, the economy is turning, inflation's increasing, supply chains are clogged up. But what we've seen very, very clearly here is a big drop-off in Germany, Canada, UK, US, the key four markets where CPG ad spend is very high, effectively falling off a cliff. And the big ones there to look at there is especially the UK, where the growth is, the decline is much, much more than what could have been anticipated 2 or 3 months ago. If we look at other elements as to why spend might be declining, this is a question we get asked a lot about at the moment. What's happened to Twitter's ad revenue since Musk's acquisition? Well, here's a story. Generally, we are seeing some brands effectively kill their entire advertising strategy. Audi, United Airlines, Pfizer, Volkswagen, Mondelez have mostly stopped advertising or cut spending on Twitter by over 50%. And while Musk has sort of reassured advertisers everything's going to be fine, looking at this very clearly, there's been a huge, huge drop in Twitter spend. So again, across the board, we are going to be seeing decline in spend on ad platforms, but a lot of what you've seen, particularly in the drop-off in Q3, might be related to Twitter as well. Where the spend is going, though, is TikTok. If we look at the lion's share of ad spending, TikTok reigns supreme. We also noticed that retail was the largest category of ad spending for TikTok. Biggest spenders there were Shein, Nike, JD Sports, Vinted, so the retail brands. Alongside that, some of the brands I mentioned earlier that are growing, Disney Plus, Amazon Prime Video, doing loads and loads of advertising on TikTok too. That clearly helping with their growth. And the focus here being that where we are seeing brands doing well, they are looking at strategies outside of the traditional digital advertising assets and spending a lot more time and focus on TikTok. So that's mostly me covering a lot of the doom and gloom elements. We're going to run through some of the category trends, and there are some positives in there. And there are growth areas that we're also going to focus on too. Travel, education, buy now, pay later, for obvious reasons, are the main ones that we'll be focusing on for this next segment. Starting with travel. So what's really interesting, if you look at the chart here on the left, is what we kind of have there in gray is the monthly active users of travel aggregator apps in the UK. And the green line is CPI, so inflation. And effectively what you can see in this instance is the trend line is almost following the CPI trend line is almost exactly following the MAU trend line. Effectively what this is telling you is money-saving aggregation apps are obviously doing better when the economy is in a worse state. That said, this trend is only limited to the UK, and that's because the travel aggregation apps that we've seen the most downloads in are flight apps. The UK obviously being an island means that most people will likely be booking planes to go abroad rather than trains. But if we look at the continental European piece as well, similar kind of a scenario here. The train line apps are growing and the aggregator apps are growing extremely well. And the popularity of the train apps in this space are linked to effectively government intervention. We saw a whole host of incentives brought in place to travel around Germany, to travel around continental Europe. The €9 rail pass scheme was a big one. France banned short domestic flights where rail alternatives were less than 2.5 hours. And a whole host of new high-speed railways have been rolled out across Spain too. So some of the positives in all of this is that we are seeing travel categories spiking, and often where travel is cheap, it's those categories, and where it's effectively saving money for consumers as well, it's also doing particularly well. Another area that's done very well is the buy now, pay later segment. I know we had Klarna on stage earlier, and there's a very clear reason as to why they're doing very well. People are having to defer payments. Payments are big things. Klarna have also done a fantastic job in integrating in big platforms. A lot of the food delivery services and most e-tailers now have a Klarna payment option, but inflation and cost of living is, of course, driving people wanting to split payments too. And so the interesting trend for me is if you look at the chart on the left-hand side, if you look at H1 2021, BNPL, effectively what we call the traditional BNPL guys, the Klarnas, the Affirms, had 5% market share. That's nearly doubled a year later to 10% market share across the entire finance category. What we mean by other BNPL apps, and those have also continued to grow or at least maintain some steady positioning, are apps like PayPal, Monzo, Curve, where there are options to split payments or pay later. But nonetheless, what we are seeing is that overall proportion of the finance category, those that have a BNPL integration are doing exceptionally well. Again, for obvious reasons. As I said, there's going to be a theme. The theme is the economy is shit. If we look at Klarna, Klarna still maintains the majority of the market share in Europe. They've done a fantastic job. Their funding round, of course, helped. They raised 639 million at a post-money valuation of $45 billion. They've used that money to good effect, and we can see the success that they've achieved. But one thing that we are expecting to happen soon, obviously it's going to be at Apple's own pace, is for Apple to release their own BNPL features. They've launched that in the US, as a lot of people probably know, where users can split the cost of their purchases into 4 equal payments without any interest or late fees. And although Apple Pay haven't necessarily announced that there's going to be an expansion into Europe, the recent acquisition of a UK-based banking provider, open banking provider called Credit Kudos, is signaling they're likely going to enter this marketplace. Credit Kudos has banking licenses across Europe as well. So it is likely that BNPL is going to become far more competitive. The challenges to some extent for Klarna is going to be the fact that iPhone accounts for well over 50% of devices in market in the Nordics, the Netherlands, the UK, which are some of the most valuable markets for Klarna. And then also, more importantly, France, Italy, and Spain to have a significant minority of phones that are iPhones. So we expect this to be a big trend in 2023, and we expect that to be accelerated given Apple Pay as a service line is becoming more and more important for Apple. Another trend we're noting, again, driven by inflation, cost of living, is this huge increase in second-hand apps doing, second-hand sort of vintage apps and second-hand apps doing extremely well, particularly in the fashion category. So Vintage Advantage, particularly with that huge growth that we saw from July onwards, might be linked to the fact that the app's not only used to buy second-hand clothes, but also allows you to sell clothes, which give people an extra source of income, right? It's a two-way marketplace. It's kind of like eBay. So that means that you're doubling the effective number of users. You might have some apps where the marketplace themselves sell second-hand clothes, but the fact that you have sellers and buyers means that's probably spiking that number. But nonetheless, I think given the slowdown that we're seeing across all the European markets and the challenging economic times, a lot of the second-hand apps are doing extremely well across all categories. Fashion is probably the clear winner there because, people can go about, spending habits that they'd become accustomed to during the pandemic. Huge explosion of shopping apps, as I talked about last year. That slowed down in terms of shopping app growth, but the second-hand market has definitely picked up. Another category that's done extremely well, and this was a bit of a surprise, this isn't something that we necessarily predicted, but we've seen this in the data, is how much Europeans are spending in education apps. We hands up, we thought 2 years ago this was a pandemic trend. It wasn't going to persist into 2022. We were wrong. Every minute, Europeans are spending $550 in education apps. In the first 9 months of 2022, they spent $220 million, and that's 14% growth. The growth, unsurprisingly, has been led by language learning apps. We had a host of people on stage today from companies that make up that roster of very successful language learning apps that have been doing a fantastic job maintaining revenue. Duolingo, Babbel are amongst them. Alongside language learning apps, so music learning apps have done well too, like Simply Piano. And those are the top grossing apps over that period. The three apps that I've just mentioned, Duolingo, Babbel, and Simply Piano, actually accounted for 53% of all the education revenue from in-app purchases. So again, if anyone is in that space, or if anyone is looking at how to retain users or grow users in this space, it might be worth tracking those three competitors. They've done quite a lot in terms of their monetization models to make sure that they maintain strong revenues, which they have. Interestingly as well, Duolingo accounted for 1/3 of the total. So Duolingo's push into Europe and their change of monetization strategies kind of driven this along too. Another good example as to how some brands have reacted to challenging economic times is to hedge against further declines in consumer spend by changing their monetization model. So if we look on the right-hand side, the lower right, we can see that the third highest performing in-app purchase for Guitar Tuner is their yearly package, which they brought down in price. It shot up the rankings. And as a result, we saw this huge growth in revenue as well. So they were kind of at about $600,000 a month mark and closer to 1.5 million now. Again, small changes where they're sort of hedging for potential future losses is actually effectively driving revenue in the here and now, which is probably where they need it most. And then that kind of leads us into the key trends segment, which again, will focus on a lot of consumer spend and what we can do to effectively push back against expected declines in what consumers are going to spend their money on. So the key trends we expect for 2023 are that the cost of living crisis is going to propel new monetization strategies. We've already started to see this, so it's not necessarily us sort of looking into the magic ball and predicting this. We're seeing this already happening. We've seen this over the last 3 months. Be Real has seen this huge change in the way social media apps are now engaging with their users and what additional affordances they have on the device, including dual cameras. And then we're also going to have TikTok is responding to a slowdown in advertising spend by adopting new business models, which we also expect to play a big role in their growth in 2023. So I want to start off actually talking about what Tinder said to shareholders very early on, and I think Match Group's generally been very good. They've been public for a long time at tempering shareholder expectation. I'll read out the whole quote, but effectively what they've said is Tinder is feeling the impact of a la carte softness more than our other brands, given its younger user base, right? So they don't often go on 6-month or yearly plans. It's normally monthly payment plans, which tends to have less discretionary income. We're quickly revamping our merchandising strategies, which have historically focused on sales from large bundles with high prices, and to help offset some of the impact at Tinder. So effectively, they know consumer spend is shrinking. They know there's likely going to be people not subscribing at all. So what they're doing now is actually going for more of a micropayments model to make sure that Gen Z, who are effectively their main user base, are still using the app. I spoke about gaming as being a big bellwether for how the app economy is performing. The music category also is too, particularly because, people paying for music subscriptions, is mostly a given. And when people start to drop off spending in these categories, it's a larger sign. And leading music apps have seen their worldwide year-on-year revenues drop dramatically. We had a record low in Q3 2020. Q3 2022, only 1% growth. And given how competitive that space is, given how much marketing goes into this particular category, that's very surprising. And again, where we're seeing the largest group of people unsubscribing is in the Gen Z cohort. So again, similar to Tinder, we're seeing Gen Z, who even Bloomberg have projected to be, unsurprisingly, the largest and most worst impacted group from this cost of living crisis. They're the ones who are unsubscribing to most of these platforms. And the challenging thing for a lot of people in this room is those are your new use. That's your new user base. That's where you're going to get your growth from. That's where you're going to get revenue from. Those are your new customers. And we are seeing a big decline in spend. So new monetization strategies will be important. And revamping monetization strategies might be worth considering. And I also, for new people in the audience, I do want to say this isn't something that we normally go out and say very often. Whenever we're on stage, we just say, hey, look, everything's growing up and to the right, and things are fantastic, and look at these growth areas that you should look at expanding into. I think this is the first time we've done a presentation like this where we don't necessarily have the same levels of growth as we've previously seen. And so it's worth bearing in mind that it might be worth considering, not necessarily executing upon, but considering new monetization strategies, given that Gen Z is expected to spend a lot less money. To that point, if we look at which apps are likely to be impacted or which categories are likely to be impacted, BeReal, Snap, TikTok, Instagram, Facebook have all been looking at changing their monetization models. We can see here the proportion of App Store users that are between 18 and 24. And obviously, no surprise, it's largely huge across the board, but particularly with BeReal and Snapchat, well over 1 in 5, often 1 in 4 users is between that specific demographic of 18 to 24. And so if these guys are spending less money, if advertising spend is going down anyway, where are these guys going to monetize from? And similarly, if you have users in that cohort, how do you intend to monetize them? And that's a question I think everyone in the room should be asking in 2023. On the dual camera point and switching away from the earlier topic around monetization strategies, we also expect a key trend for 2023 to be around dual cameras becoming more common. So for people in the room who don't know, Instagram added dual camera feature in July 2022. A month later, Instagram followed. And that's all effectively copying the success of BeReal. TikTok's done the same thing, TikTok Now, which actually in the UK can be accessed via the TikTok app. It's a standalone app in some other markets as well. Also has dual camera functionality. And I think we'll see that across a whole multitude of apps going forward, including some of the more mainstay social media apps, like the YouTubes and the Twitters and the Pinterest too. It is becoming very common to have that as standard, and that has been driven by BeReal. The important thing to also bear in mind with BeReal, though, is they are looking at monetization strategies outside of advertising, and so again, how well they do given the omni-channel approach to monetization is also going to be interesting here. So we talked about TikTok Now launching. One thing that we thought stood out in the data is worth mentioning was just how BeReal decided to approach TikTok Now launching. It was a full-on smear campaign. Effectively, the moment TikTok Now launched, BeReal came out and very aggressively said, and you can sort of see this in red, just in that second box. Their previous short description was, be in touch with all your friends. Then it changed to not another social network, and effectively they said, BeReal's not going to send your data to China. And effectively that's a message they just hammered home consistently. And we can see across the board sort of how that's resulted in general performance. But the key message they've been pushing, as they obviously fear the TikTok threat, as anyone does, is we're secure and we're a safe space, and TikTok Now clearly isn't. Keeping on the issue of TikTok, and the final point and the final sort of prediction we make for 2023 is that we are going to see TikTok fundamentally change their business model. TikTok's had a record revenue, it's a record increase in revenue over the last 3-4 quarters, and this data that we're seeing here is just from in-app purchases. So if we ignore the fact that you can buy coins on TikTok and obviously give coins, this is 1-2% of their entire business model, given the majority comes from advertising. This model is upending social media's apps' business models, and we're definitely seeing people trying to adjust and have a dual model where you're monetizing users in-app, but then also monetizing them through advertising. Again, though, the thing to stress is the general projection is advertising spend is going to be declining. So again, TikTok are already shifting away from this and looking to see how they can monetize their users through means that aren't advertising. Talking of TikTok's average in-app purchases, again, despite the fact that we are living in tighter times, they've also done something similar. They've packaged their coins so that you can buy coins in bulk, effectively hedging coins, and effectively you can buy 1,300 coins for $20, and that very directly impacted the amount of average revenue that TikTok made per user. And again, this is an important point. We saw this with Guitar Tuner, we've seen it with some of the language learning apps. We're seeing it with TikTok here as well. Effectively, I think most people are forecasting 2023 to be fairly grim, and as a result, a lot of the in-app purchase packages and the monetization strategies are focusing on monetizing their user now in year-long plans or long-term plans. So yeah, those are our three key trends. Yeah, just to conclude, what Sensor Tower is seeing and what we're also saying is that consumer spending has surpassed 31 billion, but again, that was a decline versus year on year. Gaming revenue has seen the steepest decline, whilst the entertainment category is doing extremely well. Some categories have mostly weathered this storm. Travel and education has done extremely well, so has BNPL for very obvious reasons. But that said, the cost of living crisis is going to propel new monetization strategies. We are already seeing it, but it's just going to become more and more mainstream. The early adopters are just acting now, and that's what we're seeing in the data. And the younger user base are going to be, likely the biggest beneficiaries of lower pricing or changes in strategy. Now, in some areas, in some parts of the world, obviously, you can't discriminate on price points based on age, but where you can, we expect users to have tiered pricing based on the age group that they fall into. Dual cameras will become a thing across all social apps, on the majority of key social apps in 2023, with leading players already rolling this out. And we do expect TikTok to push the in-app revenue monetization model far, far more than they currently are, because there will be a decline in advertising spend overall. Cool, so that's me. Thank you very much for your time and attention, and hope you have a good rest of the day.